Hemang Jani is also joining us. So now, Hemang, good morning. Were you able to take benefit from the one-day crash which we saw in mid-cap, small caps? Did you nibble in, or were you waiting and it just missed the bus? Or what exactly happened?
Yeah, good morning, Ajay. I think we are in a market where you see a very short-term volatility basis, either the global news flow or some normal domestic market development. But typically, whenever you've seen any corrections, cuts across whether it's mid-cap or the larger cap markets, buy and dip has been a decent strategy to go with. So I think, though this entire mind space has been occupied by the recent developments in Middle East, between Palestine and Israel, what is really important to know is that the earnings season is underway, and our sense is that the numbers are going to be very strong. US also, you're seeing positive triggers in terms of bond yields and possible stability in the markets. So overall, things are looking quite positive at this point of time.
What about your outlook then, Hemang, morning on the entire, theme of the World Cup? How are you looking at individual sectors, companies, hospitality, food delivery, airlines, etc., really benefiting from a stock market perspective and really cashing in on this boom?
So the next 2 quarters will be driven by big events like ICC World Cup and the festive season, and these will serve as a big positive catalyst, at least in the short term, for the consumer demand. So the whole host of sectors, QSR, hotels, aviation, would see a decent amount of traction on the back of that. Of course, the crude price will be a key monitorable because of the events unfolding. But we've seen how the markets are able to digest that when it's a short-term spike. So the specific names that we like are Titan, Indian Hotels, Zomato, some of the other consumption names like DMart. So we continue to have a positive bias on these names.
Hemang, CLSA's global team has put out a very interesting note this morning, calling it Incredible India, and on the one side, admitting that high valuations do become a challenge, but cannot help but back few names out there because credit growth impetus is likely to come from here on. And we are entering that phase of the year where Indian economy actually witnesses a lot of buying, festive season, harvest season, all of that. If I were to ask you to bet on any of the SME lender, personal finance kind of a lender, or housing finance company, which one would that be? Because that's a direct play on heightened spending.
Yeah, so I think NBFCs have been outperforming for the past about, let's say, 3 or 4 months, ever since we had that indication of a rate pause. So within the NBFCs, you have some companies which are essentially housing finance companies. So LIC housing is something that we have been liking, and if we have any incremental announcements on housing related aspects, surely it will have a big impact there. Apart from that, Mahindra Finance in the large cap, the Bajaj Finance and Bajaj Finserv have been outperforming big time despite high acquisitions, and they continue to report very strong business updates. So I think if you want to play a little safe and where the companies have a slightly better valuation comfort, I think Mahindra Finance and LIC Housing, these are the two names that we would go with.
Right, M&M Finance, LIC Housing, that's what Hemang is veering towards as some of his recommendations within that space. But just taking a look at the kind of price action that we've witnessed on individual counters within the last 1 month or so, and it's been interesting. The likes of an IOB, for instance, have scaled up nearly 40%. Keynes Tech as well, Nikunj has been flagging this one off, has had a pretty terrific run of about 30% plus, and you've got something like a Gujarat Ambuja Exports as well, which has scaled up about 28% in this week. Curious to get in your take, Kunal, on the charts. Any of these names are looking good for a further up move, or they've run their course?
I think Keynes is looking quite attractive. So, Keynes, Sirma SGS, many of these stocks, they have of course done exceptionally well. But then, it's a very similar kind of a trend that, when these stocks go into a strong uptrend without any major kind of a drop or a retracement or a correction for these stocks. And when you see consistent buying, that which means that this is now likely to get into a multi-year uptrend. So something like for example, we saw in the defense stocks in a couple of years back, when the defense stocks started to move up higher. We expected that the stock moved up into a an overbought territory in a shorter span of time, but then overbought territory in the short span of time actually results into more longer term uptrend for these stocks if they sustain. So I would believe that the likes of Keynes, Sirma, SGS, they're actually showing similar kind of a trend for themselves. It's always better to try and buy these stocks at a point when you are confident that the longer term outlook looks attractive, and then start to nibble into these names in case if there is any mild kind of a correction. Because ideally in this kind of a scenario, at least looking at the very recent charts, the history for these stocks, it's very difficult to anticipate that these stocks may go into a very sharp phase of correction, something which we've not seen at least over the last 6 odd months for these names.
Okay. Hemang, just stay with us. In fact, all of you just stay with us. We'll just hop on to our research test once again. Sharad is joining us with some data on insurance stocks. Let's check out that data and we'll discuss specific stocks from that universe as well. Sharad, tell us.
Well, yes, sir. So we are focusing what the insurance companies have bought and sold in terms of fresh entries and exits for the month of September. Do remember, insurance companies do have allocations as equity investments as well. Now, looking at ICICI Pru, we have new entries coming in Restaurant Brands Asia, RBL Bank, IDFC, while exit coming from the names such as Tata Power, Supreme Industries and Apollo Tyres. Apart from ICICI Pru, SBI Life Insurance is in focus, and the new fresh entries coming in is Concord Biotech, which was recently listed, and also Tata Communications and TVS Supply Chain. In terms of exit, two names have come up, Imami and Vardhaman Textiles. Also after SBI Life, HDFC Life Insurance is in focus, and here Nykaa, Macrotech Developers and RR Cable are the fresh entries, while the exits, the names include Kansai Nerolac, Chalet Hotels and also 361 Wealth Management. Lastly, I'd like to point out Kotak Life. Over here, the action has come in, especially in the mid-cap space. The entries coming in fresh, PG Electroplast and Phenolix Cables, while the exit coming in for Astral Pipes, Gujarat Gas and lastly PNC Infratech.
All right, thanks very much. That's interesting to check in on some of the stocks that have been bought and sold by the insurance companies. Meantime, Hemang, how are you reading into the news? It was an ET Now news break actually with respect to Cipla that they're facing a hurdle in differences over the valuation, this time around. What exactly is it that you are, reading into, given that there has been that proposal to sell equity stake in the drug firm?
Any transaction of this scale will have its own challenges in terms of valuations, in terms of other regulatory issues, etc. I think the fact of the matter is that Cipla management has been looking out for a buyer for a substantial stake held by Dr. Hamid for a while. And it remains to be seen as to when and at what valuations it finally fructifies. However, in the meantime, the focus will clearly be on the kind of performance that the company reports. And we've seen last quarter, Dr. Reddy's, Cipla, even Sun Pharma reported decent set of numbers. So this quarter, again, the expectations are that given the stability of price in the US, some of these companies would deliver reasonably good growth. So I think the view there is positive. Of course, it's always a bet between risk off and risk on. When the defensives are at play, some of these companies tend to really do well. But they cool off when BFSI and mid caps and small caps are in favor. So you have to strike a balance.
Hemang, did you catch this new piece of news this morning which says that the current management, it's on Religare Enterprises, the current management believes that the open offer which is been announced by the Burmans actually doesn't reflect the right value of the stock of the share, and they believe that the underlying value is much higher, and they are proposing an independent valuation. Do you track that stock, and or maybe after the Burman open offer, any likelihood of re-rating ahead?
So, Ajay, I don't track the stock very closely, but my sense is that given the current positioning, the market cap of the company is about 7,700 crore, and the kind of positioning that they have, I think they are reporting a quarterly profit of almost about 140 odd crore. So clearly, if you see somebody coming into the company and infuse funds, there is a scope for re-rating. Now, what valuation the buyer is willing to give is a matter of their own judgment. So I think there is a inherent value. The current market cap does not surely reflect that, but I haven't really looked at the more details, so won't be able to comment.
There's a lot of emphasis as well on the entire logistics space. And I'm wondering, Hemang, if you're looking at any stocks within this entire listed arena that you can bet on for the long haul?
Absolutely. I think given the kind of traction that we are seeing in the domestic economy and some of the data points like airway bills and even the GST collection, etc., I think the logistics is going to play a key role more so because of the kind of traction we will see on the consumer demand. So I think Blue Dart and VRL Logistics, these are the two names that we've been liking, and they've done reasonably well. But I think given the incremental triggers in terms of the growth, I think people would want to really relook at these names. So we have a positive bias on these two names.
Look at some of the names from yesterday, which were the big buzzers. Coal India, which managed to hit a 5-year high for itself. There was a big move coming in on NMDC. There was Godrej Properties, of course, which held out very smartly. And then City Union Bank, which perked up all the way in excess of 7% in trade yesterday. Led, of course, by Escorts Kubota after that massive price target upgrade coming in from the House of Dam Capital. Now pegging the price on a 12-month basis, or target price rather, all the way in excess of that 5,000 rupee per share mark. But Hemang, just wanted to get in a sense on PSUs at large and ex-PSBs. They've had a fabulous time in the last 1 year or so. I mean, cases in point being NMDC, Coal India, and I can go on with the list of names. Are you comfortable buying or adding fresh positions to any of these names, even at these levels, after the run-up that has already transpired?
Within the PSUs, if you exclude the public sector banks, I think some of the commodity-based PSUs, be it NMDC, Coal India, SAIL to some extent, I think there is a lot of comfort in terms of valuations, and if you see revival in the let's say metal sector per se on the back of what's really happening in China, the fresh amount that they really put in to revive the economy would surely have some rub-off on these companies. So I think Coal India, NMDC, these are the two names that we continue to like. And I think at these valuations, there is definitely a case of some sort of a re-rating. The quarterly numbers are going to be quite good. So one can really participate at this point of time.
Well, Bharti is also moving very quietly but steadily higher, almost now at 950. Is it ripe for 1,000 kind of a level also in the near term? Does it appear so?
Yeah, Ajay, I think the stock should head towards that 4-digit mark. And remember, it's a very, very low beta stock. So I've done the stat for Bharti Airtel some time back when the stock was around 550, 600 mark. The beta for the stock is around 0.5 to 0.65 approximately in best of the market trends, or even in the phases when the market volatility shoots up higher. Now, even the last 2-3 months, if you look at the price charts for Bharti Airtel, at a point when the Nifty first made a high in the month of July, went into correction, then made another high of 20,000 plus in the month of September, and so far, we are still looking at Bharti Airtel in the last 3 months gaining from 750 levels to actually around 900, 950 odd mark. So that itself is an indication that the stock is moving into an own tangent, devoid of the overall market. Of course, not highly correlated with the index movements. I think that's the bigger hallmark feature for the stock price, which means that what this stock it would probably do is go into a consistent uptrend over the medium to long term charts. You can't expect, you generally don't expect a very fiery kind of a move from Bharti Airtel, looking at the way the historical trends have shaped up. But if you have a time frame of say 2 years, 3 years, and you're looking at a 15 to 20% kind of a steady return, I think the stock would probably tend to deliver that.
And Hemang, where does your preference lie within the entire FMCG space? What is it that you're penciling in when it comes to volume growth in the upcoming quarterly numbers?
Within the FMCG, we like DMart, we also like, to some extent, Dabur and Godrej Consumer Products. I think these are the names where we expect a reasonably good, growth in terms of volumes for this quarter. Also, the margin pressure also is easing out. So I think, one should really look out for these names from a short to medium term perspective.
Right. Okay, those are a couple of stocks which are in focus. Kunal, in fact, I want to take stock of some of these big movers from yesterday. Coal India, NMDC, any of these commodity PSUs you think make for a good long even now?
Well, I think both of them. So Coal India looks very attractive even at 300 plus levels, and this is the first time I think in the last 5 years that the stock has managed to break past about the psychological level. What I like about the charts for Coal India is the approach the stock has shown in the last 2-3 months from the August second half rally for Coal India. I think from 225 or 230 levels straight in a matter of just about few trading sessions, the stock went to as much as 280. And then from 280, the stock has gone through a gradual consolidation. So we call it as a rising consolidation, something which is very rare to find in a PSU stock, and that too of the cadre of Coal India. And post that, we've seen yesterday the stock being past about 300 levels, which is again a psychological breakout for the stock. So I think it's a very strong move, indicative that we are looking at a possible change of a bigger trend for Coal India. Even for NMDC, I think it's an excellent chart. The stock has done phenomenally well in the previous quarter, moved up from I think 110 odd mark to 140-45 levels. So far in the last 1 or 2-3 weeks, the stock was consolidating. So I think it was stuck into a 10-point, 12-point band around that 145 mark plus minus range. But I think after yesterday's move, as well as the move which is trickled into the other commodities kind of a stock, I strongly believe that NMDC should be heading towards a huge breakout for itself. So again, a very good time as well as a price point to enter the stock at current levels.
Hemang, UBS says that food delivery market has actually grown at a very fast clip in the July to September period, clocking almost 10% growth. I mean, we all know the triggers, it's sports, festive season, all put together. Meanwhile, Zomato too has come to 106, 107. Growth is not an issue. Profit consciousness is already back at the management. Would you buy it at this level as well if I've missed out much lower levels of 45, 50? Hemang?
I think if you look at the monthly usage data, you also are looking at the catalysts coming through from the World Cup. Also the fact that most of the legacy issues are behind, in terms of allocation, in terms of blanket performance. So I think this is one name which has really displayed a very good amount of conviction on the performance. And I think there's a long way to go. So though the stock has actually run up, let's say the downside, it was close to about 50. From there, we are looking at almost about 100% kind of a uptick. But in terms of incremental growth and the fact that you don't have options to participate in this opportunity, I think Zomato can give you another 15-20% kind of an upside. But if you see a bad day in the market, let's say where the stock corrects 5%, 10%, that would be a much better entry.
Okay, fair enough. Let's find out what the pre-open rates are indicating at 9 a.m. and holding out in the green for the Nifty by about 130 points. For the Sensex, ditto is the case. Do remember the kind of handover as well that we witnessed from the overseas markets indicated that it could be a positive start. Let's find out those mid-cap strategies. Naresh, what are you picking for the day?
So that would be a buy on CRISIL Limited with a stop loss at 3,900 and a target price of 4,500. The stock was in a sideways range for the last 4 months between 3,800 to 4,050. Yesterday they saw a breakout. Day before also saw good volume. So good price volume breakouts over the last 2 sessions. A new 52-week high and an all-time high. Should see some follow-up back going forward.
Okay, Kunal, what's your top mid-cap recommendation?
So I'll go with Paytm as a buy. The stock yesterday managed to break out of that 940 mark. It was flag pattern breakout for Paytm, closing above 940 levels. So would expect the stock to show a strong follow through over the next couple of days. 990 as a target for Paytm, stop loss at 925.
Okay, that's the take coming in on some of the mid-cap ideas. But let's also tell you what else is happening outside the world of equity markets, and then we'll continue our discussion with Hemang. But as the war between Israel and Hamas enters into its 5th day, Israel has claimed that it has captured Gaza, even as fatalities have crossed 3,000 in count. In the latest, US President Joe Biden has pledged to provide massive military aid as a transport plane with advanced American ammunition landed in southern Israel. This is the first US plane carrying ammunition arriving in Israel so far in the last 5 days. And days after multiple earthquakes struck northwest Afghanistan, another powerful magnitude 6.3 earthquake has struck the country on Wednesday. There were no immediate reports on any loss of life or damage to the property due to the fresh tremors, but the Saturday's tremors of the same intensity killed more than 2,000 people, leveling thousands of homes in the country. And back home, in what can come as another pocket-pinching news for citizens, Mumbai's Rickshaw Men Union has petitioned the government that a fare hike of rupees 2 in the base fare of auto rickshaws be undertaken, citing increasing consumer price index along with higher maintenance and repair costs, etc. as well. The present base fare of the autos in the city is about 23 rupees, and the ask is to up it by another 3.
Meantime, Indian cinema's legendary superstar Amitabh Bachchan is celebrating his 81st birthday. Big B chose to have a brief interaction with his fans who gathered outside his residence on this special occasion. His birthday will be marked with a special KBC episode. In the world of sport, Indian athletes have created history by achieving a record medal tally. Lauding their performances, the Prime Minister met the Indian athletes and congratulated the women athletes, saying that they had given some amazing performances and accounted for half the medals that had actually been won by the total of 660-member contingent. And India will be taking on Afghanistan in their second game of the World Cup 2023 at the Arun Jaitley Stadium in New Delhi. India defeated Australia, remember, in the first match by 6 wickets. And now the men in blue will be looking forward to the winning momentum continuing against Afghanistan. India are likely to drop R. Ashwin and bring Shardul Thakur into the match.
All right, let's move on and get you some juicy gossip from the dealing rooms. Sharad is here with the stock in focus, which is being discussed by the dealers. Gravita India, what's brewing there?
Well, yes, just to give a background, this company is a small cap company and the company is a recycler of non-ferrous secondary metals. And the buzz in the street is that a scrap, which is actually kind of raw material, the higher they get, better it is for the company, and they expected to get a large order coming from scraps in the coming months. Now, important development also coming in is the capex announcement, which was there earlier. It's a 650 crore capex announcement over the next 3 years. That means the capacity is expected to go up by almost 2.4 times. Also, a high margin contribution coming in from the overseas business, and the management and the street both expect that at least the margins will be going at least at 10% on a sustainable basis going ahead. And looking at the market share, totally it's coming at almost 5 to 7% when it comes to recycling in the lead market. And importantly, this industry which we have been tracking, this actually is going to go up almost 35% on a CAGR basis as per the broking house reports for the lead segment. And this will be there over the next 3 years. So do watch out for this stock when it comes to order wins.
Right, we certainly will keep the Gravita India on our radar. Thanks so much for those details. Meantime, then, Hemang, want to get in your thoughts as well as to what the outlook is within the entire cement space, given that expectations are that it could be a pretty strong quarter this time around. Would you be looking at opportunities within the cement basket across the board?
Yeah, so apart from the fact that the numbers are going to be reasonably good, what you're seeing is that price hikes are being taken in certain pockets, eastern, southern in particular. Also, the fact that M&A is at play, and you might see a couple of more companies being acquired. So the mid cap and the small cap cement companies surely will be in action. So JK Lakshmi Cement, JK Cement, I think Ramco Cement, which is based out of Chennai, should be a good bet to look at. So I think all in all, in an election year, people really want to participate in the cement space because of the kind of announcement the government ends up making. You have both state elections as well as the general elections. So I think the view there is quite consistent.
Okay, fair enough. That's the view coming in on the entire cement basket. And where within auto ancillaries, Hemang, are you looking at opportunity?
So auto ancillary also by and large is doing well, but the thing is that when you see a sustained monthly numbers that OEMs report, the action in the ancillary comes with certain amount of lag. So from a global perspective, Motherson and Bharat Forge are the two names that we've been liking. I think one should really stay focused on that because globally also when you look at the numbers, the auto companies are doing quite well. So I think it would be good to participate through some of these companies which have a global exposure.
Right. Hemang, before I let you go, since you've been part of the Indian asset management market related platform community for such a long time, is it a good time for new investors to get into, say, an AMC stock or maybe an asset manager, wealth managing kind of stock? You think it is a structural play from here, or valuations are not very comfortable for you?
I think it's a great opportunity, Ajay, for new investors or even for that matter, existing investors to participate in the capital market related plays. Now, that's a broad spectrum that covers the brokerage firms, some of the exchanges, the wealth management companies, the AMCs, and so on and so forth. So, if I have to give you one or two specific recos, my number one pick will be 361 Wealth, which used to be IIFL Wealth at one point. I think given the way they have shaped up the product offering, the AUM and the growth, I think that is looking quite compelling. And the other one I would go with is BSC because you're seeing that the cash market volume is picking up. Even their F&O, the new offering, you're seeing a good amount of traction coming through after a long, long time. You also have essential cash on the sideline. So I think these are the two names that I would be, having a high conviction.
Okay, Hemang, always great to have you on the show. Thanks as always for taking the time out and joining in today. Let's just revisit where the pre-open rates have settled in at. Marginally